Hello everybody and welcome to Coffee with Great Wealth Strategies. This is regular Joe Eric Kenyon and I'm all out of Joe today. And that's okay because we're doomed. We're completely doomed. But seriously, we're going to talk about the financial tsunami that is headed towards us. It's cresting and about to hit shore at the end of this year, 2012, going into 2013. So let's pick that apart and take a look at it as we go through today's session. So the financial triple whammy, a huge one, is headed straight for the U.S. taxpayers at the end of 2012 and the beginning of 2013. It's known as, and you've heard it all over the TV and all over the radio, the Fiscal Cliff. It's an economic event is expected to happen after the expiration of the Bush-era tax cuts, the cessation of consumer stimulus plans like the prolonged unemployment benefits and the 2% payroll tax cut that Obama did, and the automatic spending cuts triggered by the Budget Control Act of 2011. So today we're going to take a look at the big numbers behind this fiscal cliff and what it could herald for investors of the stocks, just the market, but stocks and bonds. There's a sucker punch here for the economy, and it starts with a tax hike of roughly $280 billion. Which will increase levies on income, capital gains, dividends, and other financial instruments. Those in the top rate bracket will see a jump from 35% to 39.6% simply for their pre-tax income. That's before any other taxes are administered at all, even the ones that come in. I think there are 210 additional taxes in Obamacare alone. So according to some economists, investors who rely on the stocks and bond markets for trading could see their income decrease between 15 and 30% next year. Another 125 million will be chopped off the economy when popular stimulus measures expire at the end of 2012. This number is the best case scenario, as economists can only predict what the fallout in the U.S. consumer base will produce for retail sales and overall business strength, which in the long term could hurt investors further. This effect will be compounded by the end of the $40 million in unemployment benefits. $98 billion in domestic military spending will also be cut by the year's end. Cumulatively, the fiscal cliff could reduce the U.S. GDP by 3.5 to 5%. It's barely growing right now, and we're going to whatever. Anyways, which at the current growth rates of about 2.5% per year, will do one thing. It'll plunge the U.S. economy back into a recession and probably a serious Great Depression at this rate. Well, these things aren't certain. These stimulus, tax hikes, and spending cuts could trigger absolute investor panic. I mean, you can imagine what's going to happen to the market as these things take hold. Which direction do you guys think it's going to go down? I won't make a prediction. I'll ask you a question. You all can think for yourself. There is still time for leaders to grow up in Washington and resolve some of this peacefully. And anyways, it remains possible that some or all of these changes are going to take place at some level, and at least temporarily. And in that event, it's going to roil markets worldwide. If you are an investor that wants to avoid this chaos and the potential financial nightmare that's coming, right for us right here, give us a call or visit us at Great Wealth Strategies. We have some ideas that I think will. I think they'll be a whole lot better than trying to swim and surf in this tsunami that's on the way. Thanks a lot, and don't feel too doomed. This is Coffee with Great Wealth Strategies, and if I had my cup, I'd ask you to fill it up and pass it on. Share this knowledge, because I don't think a lot of people know how much these changes are going to affect the world economy, the U.S. economy, taxes, investments, and the government, Wall Street, and everything else. So please pass it on, and look forward to seeing you here next time. Thanks. Bye-bye.